Welcome to FOMO Consulting for your daily AMC stock analysis video on Friday, July 30th. Ladies and gentlemen, Monday may be huge. We'll get into that shortly. And as always, the apes are winning, the diamond hands are winning, most importantly, retail investors winning. So if you find this video informative and entertaining, please like, share, certainly comment, most importantly, subscribe. It's a newer channel, and I'd appreciate the support. Let's get into the video. Thank you to each and every one of you who has liked, shared, commented, and subscribed. It means the absolute world to me. Thank you very much. Start with a quote. You're always one decision away from a totally different life. AMC, GME, others, certainly we hope will provide that different life, better life. But as always, do your own due diligence, stand on your own 2 feet, and make your own decisions. So the main driver, the main catalyst next week will be earnings. Nothing confirmed on the AMC website yet. Tip Ranks is showing August 3rd pre-market, which would be Tuesday. I personally believe that would be fantastic. Could set us up really nicely on Monday. And again, pre-market on Tuesday. Typically AMC, at least as long as I've been covering it, typically does after market. Not sure what they're going to select yet, when it will be released. Another website is showing AMC on the 5th. So we'll see when it's officially announced next week. But regardless, the earnings could be a main catalyst for next week. We'll watch this very closely, but I would have a preference of pre-market Tuesday. Overall, broader market today, terrible. Just terrible. Overall, S&P was down 23 points, Dow was down 149 points, NASDAQ down 105, and the Russell was down nearly 14, and we certainly felt the effects of the Russell. We followed it nearly identically. Big tech overall took some pretty big hits. You can see Amazon, based on earnings miss, just had a horrible day, down almost 8%, 7.5%. So overall, a lot of concerns as well around the new COVID variant, CDC guidelines. I know the cruise lines took a big hit today. Hopefully this will not affect AMC. Certainly, we hope that the FUD machine doesn't kick in and start scaring everyone going into next week, but we shall see. So let's look at crypto. Overall, crypto was mixed. Bitcoin's doing quite well, holding that $40,000 level, up just a bit. Doge also doing quite well, holding that 20-cent level, down a bit, at least at the time of this recording. Litecoin and Ethereum both down slightly, but overall somewhat stabilized. But again, Bitcoin holding at that 40,000 level, Doge at the 20-cent level, I think is absolutely key, especially going into the next week or two. It looks like it's kind of found a new support, at least this week. We shall see. Hopefully, a lot of the big hits and all the FUD and all the scare tactics are now over, and crypto can return to better days. So let's look at the options chain today. Obviously, $37 was the absolute key. I was surprised we didn't fight harder for 40, but with the broader market selling off so hard, especially the Russell IWM, I'm not surprised that we ended up in this level. However, I found a lot of personal confidence that we found that heavy level of support around that $36, $37 level, bounced off of it several times, held it very, very strong, especially in the second half of the day, after the big market sell-off. So overall, no big deal. So let's look at the German market. Overall, Germany about the same, 31.50 euros, down about 4.25%. As you can see, they got pulled down no different than us with the big broader market sell-off. So IWM, as you can see, almost identical to the AMC chart. As you can see, the Russell 2000 below followed it identically as it should, and since it's tied directly to the Russell. But overall, really past the first hour of trading, really there was just a heavy pull downward on the entire market, including the Russell 2000. So let's look at AMC. AMC closed at $37.02, down $1.11, or about 3%, and down after hours. It may be up by the time you see this recording, but overall, you can see the Russell 2000. We followed it nearly identically. We fought to stay up around that $39, $40 level, but obviously the selling pressure from the broader market finally took its toll, and we just kind of slowly bled down really for the better part of the day until really the afternoon, found that heavy level of support around that $37 level, which was absolutely key, and we closed again at 37.02. And just to make you feel better, from last week's close of 36.99, we gained 3 cents week over week. So as you can see, over the last 5 trading days, overall, just kind of a lower volume week, a lot of consolidation. We've had some ebbs and flows, but we've pretty much bounced, uh, around that $36 to $40 range pretty much all week long. As you can see, 37 is absolutely key for us, and we need to break $40 next week. We hit it just a few times this week, got rejected, obviously, but again, $40 is absolutely key to break next week, and I believe we'll do so with earnings in play. Hopefully, the earnings will be good, and the broader market settles its nerves down around inflation and COVID. So, looking at the 1 hour chart, really over the last month, we kind of found that support level really over the last week or so, right around that $35 to $40 level, which is key, as you can see. But again, breaking that $40 level is absolutely essential for our next leg up. And 37, 36, what have you, is absolutely key to maintain as a support. Looking at the 4 hour chart overall, the RSI again is in the bullish, or excuse me, bearish area. A lot of room to run. I believe that we, again, with earnings being a main catalyst, and I'll get into this over the weekend, we tend to do quite well, really after earnings. Usually the day or two after earnings, we tend to hit our stride and usually have several green days in a row. I am hoping that's the case for next week. But again, as you can see, the MACD is in a shallow bullish crossover. I'm concerned about volume, but we are in a pennant. Hopefully, in the next 2 to 3 days, we will break out of that. So as you can see, the alligator on the daily, he's just chilling, certainly not in a bearish direction, just kind of flatlining at this point, relaxing, but hopefully we can get his mouth wide open on the bullish side. And as you can see on the daily chart, we're kind of approaching the end of that flag pennant, whatever you want to call it. Volumes have been low, as you can see, and again, we are in the bearish end of the RSI, but with a ton of room to run, and we are nearly at the point where we can have a bullish MACD crossover. And again, this is a longer term momentum stock, which is why I really use these 2 indicators for this particular play. As you can see, the selling pressure has kind of subsided. Hopefully next week we can have that definitive crossover. And I personally believe the algorithmic trading, HFT, whatever, will kick in hopefully with a buying cycle. I don't think it's a big surprise that next week is earnings and we are approaching this. I believe personally it's not a coincidence. So let's look again at the weekly chart. As you can see, we did have a slight stair step up. Again, week over week, we closed 3 cents up, so you should feel good about that. And I'm expecting a breakout next week of that small little pennant there. Hopefully, we can just kind of bounce on that RSI and have another big push up. And again, same for the MACD. Robinhood had a decent day, recovery about 33 cents, still trading in that let's call it $35 area, still $3 or so below their IPO open of $38. Not so sure this is going to be a good longer term investment at this point. A lot of regulation, a lot of talk around the PFOF scenario, payment for order flow. Not sure that their business model will survive some of these regulations and some of the oversight that will come along with this, but we'll see. GME, as you can see, GME is suffering no different than us, not necessarily from heavy selling pressure, but just low volume and lack of a catalyst. I can't even say that there's sell-offs and that sort of thing, obviously it's going down, but it's easier for the algo trading to kind of press down or maneuver the stock, whether it's AMC or GME, on lower volume. As you can see, a lot of little gaps, just not a lot going on with it. With GME right now, they do need a catalyst, a lot of volume, and you will see how it looks over the next week or two. Over the last 5 days, as you can see, again, a slow bleed down, not a ton of massive sell-off, but overall just kind of been bled down due to lower volumes again, and lack of a catalyst. GME just needs to get back in the news, right? Kind of get going. Let's look at the Ortex trend data. As you can see, the short interest is all trending up, all the major indicators, and there was some covering, at least within the last couple of days. A small bit maybe earlier this week. We were over 39 days yesterday. We are at 37.65 currently of short average short positions, from a time frame perspective. So overall, they shortened it by about, let's just call it 2 days, but the short interest, as I'll show you, has gone up. The shares on loan is now over 100 million, which is a pretty big jump from yesterday, about 2.5 million. Utilization is jumped up quite a bit from yesterday, about 3% at 91.63, I believe. Kind of going back, looking in late May, early June, we were around that 100% mark, but I believe anything above 95% will also be a catalyst. But we were at 15.21% on the short interest, and today was quite honestly a little weird. Even with lower volumes, obviously broader market sell-off, there were only 1.21 million shares borrowed against AMC. They returned, again, T2, 2.16 million, 2-day settlement, but to only borrow a little over 1 million shares to short on really a sell-off day was a little bit odd, to say the least. Again, volumes were lower at 52 million, and there was a huge return on Fintel. Their short shares available of 5.4 million, kind of coinciding with probably the return of those shares, which is why the average age shortened by about 2 days. So we'll see how this plays out next week. And again, one institutional owner is out on the long side. Someone likely sold, but we still have 400, and we've had a net increase really over this week of over 5. So, and that's a good thing. I think somebody's expecting something, right? And looking at the overall IV and options data today, again, volumes were substantially lower than our recent past. We're at 528,000, 529,000 on total volume, but it was very bullish at 1.7 to 1, as you can see. And IVs continue to come down due to the lack of volatility. So that's a good thing if you're in options. But overall, not a lot going on the big trades today. But again, volumes were very, very low overall. So let's close with a quote. It takes nothing to join the crowd. It takes everything to stand alone. I know some days it feels like you're standing alone with AMC. Obviously, we have a lot of a large community, apes, diamond hands, retail investors, whether you're on Reddit, StockTwits, Facebook, whatever you're on, YouTube. But certainly making your own decision, obviously not financial advice, not financial advisor. However, doing your own due diligence, having your own confidence level in your play is absolutely key to this for the longevity of it. So I want to thank you all for watching. If you did find this video informative, entertaining, please like, share, certainly comment, most importantly, subscribe. It's a newer channel. I appreciate the support. But otherwise, I hope you have a fantastic weekend, and I hope your life is full of green candles. Take care. We'll talk to you soon.